Okay, so the first strategy you are going to learn is a variation of a strategy that I've used for over 8 years now. This is my most recent variation of this strategy, so you are getting the first look at it. This strategy is meant to take advantage of trending markets by capturing pullbacks while in a trend in order to continue riding that trend to its highest or lowest point, depending on what direction we're looking at. The first thing we're going to look at is a bullish version of this strategy. To implement this strategy, you will need to plot the 50 EMA on your chart. Again, in case you don't remember, go to indicators, type in EMA, exponential moving average is what you're looking for, click it, and go to the settings of that indicator, make the length 50. This is one of the indicators that we will be using for this strategy. The next thing you will need is the ATR indicator. You should remember how to get to that, but just go to indicators. In case you don't, type in ATR. It is the average true range, click it, and the regular settings it comes with is what we're gonna be using, which is just the 14 period ATR indicator. On top of those two indicators, we'll be using what we already know about trend and about advanced engulfing entry patterns with this strategy. That's actually going to be our entries, are these two advanced engulfing entry patterns. So with that said, let's do a quick run through of all the rules. As you can see right here, I have the full checklist set up for you, but I'm going to take you through every one of these rules and show you what it looks like on a chart. And we're also going to go through hundreds of examples of this throughout the course. So just take your time, and as I said, we'll be going through a ton of examples of this. So let's breeze through the rules really quickly just to get you accustomed to them. Our first rule is that once we have the 50 EMA plotted on the chart, price must be above the 50 EMA. We're actually going to be looking at a trade right here. So let's ask ourselves, is price above the 50 EMA? Yes, it is. Quite easy to see. As long as price is above this blue line, which is our 50 EMA, then price is above the 50 EMA. What is rule number two? Rule number two is we must have made a new higher high. What I mean by that is compared to the previous high that price made, we must see a new high before the pullback and before our entry. So in this case, has price made a new higher high? Here's our previous high. Yes, we have made a new higher high. So now, as you can see, if we're looking at this like a checklist, we have 1 and 2 checked off. Price then must pull back by at least 2 opposite colored candles from that swing high. Let me zoom in to make this extremely simple. So from our swing high, which is this green candle here, we need to see at least 2 red candles pulling back. These 2 candles do not have to be in a row. They can be separated by green candles. It can be more than 2 green candles. It can be up to as many as it takes, but we need to see a pullback from our swing high of at least 2 red candles before looking for our entry. In this case, does that happen from this swing high? Yes, it does. We have more than 2 red candles on that pullback. So with that being the case, we have rule number 1, 2, and 3 checked off. Our entry is an advanced engulfing candle. If you need to go back to the section on technical analysis that talks about these candles, go ahead and do so. But if you'll remember, we had 2 different advanced engulfing candles. One of them was a 1, 2, 3 engulfing candle, and the other was a swing low engulfing candle. All this means is that the engulfing candle itself, in this case, is a swing low engulfing candle. So with that being the case, what does it mean? It means the engulfing candle is the swing low of the overall pullback. So if we go from this swing high and we start looking at the lows of candles, then if the swing low of this entire pullback is an engulfing candle, that is called a swing low engulfing candle. So if this is the case right now on the chart that we see, then do we have rule number 4 met? Do we have a candle that is an advanced engulfing candle? Yes, we have our swing low engulfing candle. Rule number 5, if we go ahead and check off everything through here, is that the entry candle must be or directly follow the swing low of the pullback. So again, just to go over this one more time, we get a lot of questions about this. The engulfing candle itself, once we have a swing high, we're going to start looking at the lows of candles from that swing high. The engulfing candle, or our advanced engulfing entry, must either be the swing low of the pullback or directly follow the swing low of the pullback. This is what that would look like. If we had a 1, 2, 3 engulfing candle here, then it would just mean that this would be a lower wick. Now, our entry candle must either be the swing low or directly follow the swing low as we see here. An example of when this is not the case is right here. Right here, this is not an entry. Well, why, Stephen? We have a 1, 2, 3 engulfing candle. Yeah, but this is not the swing low of the pullback, right? So if we have our pullback, right, here's our swing high. Here is the lows of our pullback. What's the lowest low from this swing high? In other words, what's the lowest low of the pullback? Well, we can mark it off because it's right here. So if we go here and we mark out the lowest low of our pullback, why would this not be an entry? Well, this would not be an entry because it does not meet rule number 5. Let's look at rule number 5 yet again. Rule number 5 is that the entry candle must be or directly follow the swing low of the pullback. Does this? No, it does not, because from our highest high, which was here, this is the pullback. The swing low of that pullback is our engulfing candle. So in this case, we have a valid entry here. I did want to just explain that because it's something I get a lot of questions about. So at this point, we are down through rule number 5, and every rule is being followed and completely fine. Next up, the last rule we have before we can actually enter is the entry candle cannot close above the highest bodies of the swing high. Let me explain that real quick. So for the swing high, if the swing high is right here at our black horizontal line, then what do you think the highest bodies of the swing high means? It means right here. It means literally the bodies of this swing high. And what we cannot see, and what rule number 6 states, is that we don't want to see a candle that closes above the bodies of those swing highs. At this point, I count the candle as too large, and I do not trade that. I don't expect there to be a ton of momentum if I'm not catching a pullback. Instead, this is more like buying at new highs if the candle closes all the way up here. I know what you're thinking. I do draw candles awesome. But as you can see, this does meet those requirements in the case of our trade right here. This candle does not close above the highest bodies of our swing high, which is one of our rules. So with all of those rules coming together, we're now down to number 6. Number 7 and 8 are just rules that I personally follow. Personally, I do not take multiple trades at once, as in once I'm in this trade, I'm not taking another trade until it either hits targets or gets stopped out. And also, after a loss, I cannot trade again until a higher high or a last chance entry. We're going to discuss the last chance entry, but what you need to know is that right now, we have everything we need to place entry number 1 on this candle right here. And why is that the case? Let's go over the rules one more time. In case this is your first time hearing about a rules-based strategy, I want to make sure you're very clear on these rules. We have a price, or the price of this market is above the 50 EMA. We have a new higher high being made considering the previous high. We also have a pullback of over 2 red candles with this one, and this one. We have an entry candle that's an advanced engulfing entry with our green candle that's a swing low engulfing candle. We have an entry candle that is the swing low of the pullback. So right here, this entry candle is the swing low of the overall pullback from swing high to low. So that is met. Rule number 6 is met. Now we don't really need to worry about these two until later on. So with this being the case, all of our rules for our first entry are met. This moment, when this candle, the green candle on the screen that is circled in orange, closes, is when we enter the trade. That's when we actually press the buy button. I'm going to use a position tool from TradingView because it makes explaining this really easy. So now that we've entered the market, what are the next 2 things we worry about? At this point, we're looking at CEST. We've had all of our conditions met for this strategy. We've had our entry reason met. What do you think the next step is? We got to determine our stop loss and our targets. So let's do that. After we've entered this trade, down here you'll see stops and targets. We have a way of taking stops and targets that's called dynamic stops, and we have one-to-one targets for this lesson. We'll talk about dynamic targets a little later in the course, but we have what's called dynamic stop losses. So the way this works is right here, as you can see at the beginning, stops 1x ATR plus 5 if the ATR is under 40. Now, I know that might be pretty self-explanatory, but let me go through it and explain what I mean by that. If your ATR, which is this number right up here, is below 40, right now we're seeing 31. So if it's below 40, then we are using what for our stop loss? We're using the ATR plus 5 pips. So right now it's 31, which is below 40, which means we would have a 36 pip stop loss. The reason we would have a 36 pip stop loss is because we're going 1 ATR plus 5. And this is from our actual entry. It's not from below the swing low or anything like that. It's literally from the entry of the pattern. So in this case, the case of the actual trade we're looking at right now, if we hover over that green candle, it'll show us the ATR of it, which right now you can see is 44 pips. It's 43.8. I round up to 44 pips on this specific candle. So if the ATR is 44 pips, what would I do? Well, look down here. If we have an ATR between 40 and 50, what we're going to do is use a stop loss of 1x ATR, which is just 1 ATR plus 10. So we're using 1 ATR plus 10 if the ATR is between 40 and 50. Right now, hovering over our entry candle, we have an ATR of 44, which is between 40 and 50. So with that being the case, we're using 1 ATR of 44 plus 10 pips. So what's our stop loss going to be in this case? 44 plus 10, which is 54 pips. That is how we're going to set our stop loss. And the last variant for our stop loss is 1 ATR plus 20 if the ATR is between 50 and 200 on any currency pair. We'll look into that a lot more later. Again, we're going to do a lot more examples. But right now, in terms of this specific trade, we have a stop loss of 54 pips because the ATR is between 40 and 50. Now, for this lesson, just because you're just now learning the strategy, we're going to go with a 1-to-1 reward to risk ratio. As you can see, this specific trade would have went on to hit targets a little later in this video, or maybe in a later video. I'm not sure when I'm going to put it in yet. We are going to talk about variations of targets so you can get some bigger targets out of these trades. But that is your first entry for the bullish version of 50 EMAP. That's the way we're going to enter a bullish trade for your first entry. Now we'll take a look at another example of a bullish entry just to ensure that you understand all of these rules for the first entry. Then we'll take a look at a bearish example. Then we'll move on to looking at the last chance entry a little later on. So let's take a look at one more example of a bullish entry right now. We did not have to go far to find another bullish first entry. I want you to see if you can actually spot it. Right here is our previous trade that hit targets. Now I want you to see if you can spot another bullish 50 EMAP first entry. Hopefully you pointed this one out right here. Let's go ahead and go through the process of diving deep into every one of these rules. The first rule is what? We must stay above the 50 period moving average. So as long as we stay above the 50 EMA, then we can consistently continue looking for entries, right? We want to see price above the 50 EMA. We then want to see what for rule number 2? We want to see a new higher high. So in this case, here's our previous high. If we're pushing up, did we make a new higher high? Yes, we did. And you could even call this our previous high. That's fine too. Either way, we pushed up and made a new high. So with that being the case, we have our first 2 rules completely met. What's our third rule? Price must pull back by at least 2 opposite color candles, in this case, 2 red candles. So we have above the 50 EMA, we have a new high. Do we have a pullback of at least 2 red candles? Yes, in this case, we have multiple red candles in the pullback. So with that being the case, we can now move on. We have all the way through rule number 3 completely met. Our entry candle is an advanced engulfing candle. What's one of the advanced engulfing candles we discussed in the technical analysis section? It was called a 1, 2, 3 engulfing candle. This is when price is pushing down and we have what's considered a fractal move in combination with ending with an engulfing candle. Does this meet the rules of that? Yes, it does. We have our 1, 2, and 3 engulfing candle right here. So with that being the case, we have rules all the way through number 4 met. Number 5 is the entry candle must be or directly follow the swing low of the pullback. Just to make this very clear, I'll go ahead and zoom in. The pullback in this case is from swing high to the lowest low of the pullback. If we consistently put a line on the lowest lows of the pullback, then this would be the lowest low of that pullback. Is this the lowest low of the pullback? And does our entry candle directly follow it? Yes, it does. So therefore, all the way through rule number 5 is met. What's the next rule? Our entry candle cannot close above the highest bodies of the swing high. So if I zoom back out here and we look at the highest bodies of the swing high, which is where, by the way? That would be right here. So this is the highest bodies of this swing high, right? So with that being the case, does our entry candle close up here above this? No, it does not. So with all of that coming together, we now have all of the rules met to enter this trade. Because all of these are met, the next things we're going to worry about are I'm not going to be taking two different trades, and also the next thing we're going to talk about, which is the last chance entry. Since we're not worried about that right now, we have everything we need for another first entry right here on this candle. So let's go ahead and plot that up and talk about the stops and targets. We have our entry tool here. We're entering on the close of that candle. What's the ATR? If you look up in the top left corner of the screen, you'll see 0.00405. Remember, for the ATR indicator, we discount that last number. So it's not really it's not 405 pips, right? It's actually 40 pips. So if we have a 40 pip stop loss, 40 pip ATR, then what's our stop loss? Well, if our ATR is between 40 and 50, our stop loss is 1 ATR plus 10. So if our ATR is 40, then this would be a 50 pip stop loss, right? So with the 50 pip stop loss, again, for the sake of this video, we're using a 1-to-1 reward to risk ratio for targets. And as you can see, this would have easily pushed up enough to hit our targets on this 50 EMAP first entry. So now hopefully you're getting a better idea of the bullish version of the 50 EMAP. And what I'm going to do now is we're going to talk about the last entry for the bullish 50 EMAP. Then we'll move on to the bearish version in the next video, but let's take a look at the last chance entry right now. Before we move on to the last chance entry, I want to clear this up while we are here. For the first entry, we can have price touch the 50 period moving average. What we do not want to see is more than one candle close below the 50 period moving average. We can see the wick of a candle touch. We can even see one candle close below the 50 period moving average before we get an entry. But what we don't want to see is more than one candle closing below the 50 period moving average, because at that point, we're not going to start looking for more bullish trades. So when you're looking for your first entry, understand that we can touch the 50 period moving average with a wick. We can close below it with one candle before seeing our entry candle, as long as all the other rules are met. What we do not want to see is two different candles closing below the 50 period moving average. At the point that two candles close below the 50 period moving average, we stop looking for trades. So with that being the case, would this be a valid trade? We have price pushing higher. Do we make a higher high compared to our previous high? Well, if I actually do a straight line, you'll be able to see that yes, we do. Here's our previous high, and we have a new higher high. Is price above the 50 period moving average? Yes. Does the entry candle follow the swing low of the pullback? Yes, it does. Is it an advanced engulfing entry? Yes, because it's a 1, 2, 3 engulfing candle, and it does not, in fact, close above the bodies of the swing high. It may look like it gets close, but we use exact measurements here. So even though it looks like it's a little bit close, that doesn't mean that we don't trade. We don't trade based on close. So as you can see, we do not get above with the close of this candle. Therefore, this would be a valid trade considering only one red candle closed below the 50 period moving average. Let me show you an example of what would not be a valid first entry. This candle would not be a valid first entry because we have not only one, but two red candles below the 50 EMA before we get the advanced engulfing entry. So this is an example of what an invalid trade would look like in that case. This, though, because we have a new high right here, a pullback of over two candles, and this would be a valid entry due to the fact that we have all other rules met for our first entry, and price just touches with a wick the 50 period moving average before creating an entry. So this would be an example of a valid first entry, along with the previous example we looked at right over here would also be a valid first entry. At any point that more than one candle closes below the 50 period moving average, the process starts over. This is not a valid entry. And in order to find a new entry, I need price to start making new higher highs in order to look for more bullish entries. Now that we've cleared that up though, let's go ahead and go through the last chance entry. Okay, so here we have a good example of the last chance entry. As you can see, the last chance entry is something that happens after our initial trade is a loss. Then we just need the price of whatever we're trading to touch the 50 EMA before we can start looking for another trade. It'll be a lot easier if I just explain this to you looking at the chart. So right here, do we have a valid trade on this candle? Hopefully you were able to say yes. We have price above the 50 EMA. We have a new higher high compared to our previous high. Here's our higher high versus our previous high. So those are the first two rules. We then need a pullback of more than 2 red candles. We have more than 2 pulling back. We then need an advanced engulfing entry reason. Do we have that right here? Yes, we do. And is this entry the swing low of the pullback? Yes, it is. We have our high. We then have low, low, low. This, in fact, is the swing low of the pullback and is an engulfing candle. Therefore, we have everything we need to enter as long as this candle does not trade above what? Our previous bodies of our previous swing high. Since that is not the case, then we have what we need for a valid entry. So with this valid entry, we're going to place our entry, and the ATR here is right at 40 pips. So it's 39.8. I count that as 40. I round up. So 40 pips, that means we have a 50 pip stop loss and a 50 pip target because we're using a 1-to-1 reward to risk ratio, 50 and 50. With this being the case, what happened with this trade? Did we win or lose? We lost this trade, okay? Well, if you lose a trade, you may have enough room between your initial entry and the 50 period moving average for price to still be supported by the 50 period moving average, similar to what we saw here. So in this case, after a losing trade, we need to see all these rules are still exactly the same. It's literally all the above are still true. We still need to see the entry candle either be or directly follow the swing low. We still need to ensure that we only have one candle or less that closes below the 50 period moving average. And we need to ensure that we at least touch the 50 period moving average. So to put it in layman's terms, after a loss, I need price to stay above the 50 period moving average. And after a loss, I have to have price touch the 50 period moving average because that's showing me that the 50 period moving average may support price. Now, my confirmation that the 50 period moving average is likely to support price is looking for the same entry as we did above. So again, all of the above is true. Pretty much our last chance entry just happens after we've lost our first trade here and price continues lower. After hitting our stop loss, we get the touch of the 50 period moving average with only one candle that's red can close below it, and then we get a valid entry based on our entry rules. So in this case, we'd have a loss on our first trade. We would then enter where? Well, as we push down, we eventually get this swing low engulfing candle right here. So that would be our last chance entry. And again, just because I feel like I've sped through that a little bit, I'm going to do it one more time. The reason this is our last chance entry, and the only time a last chance entry can occur, is after an initial loss. So after our initial loss, we are going to need price to come down, stop us out for a loss, and then price must touch the 50 period moving average, and only one candle can close below the 50 period moving average, similar to the rule we were talking about for our first entry. But in this case, we need only one candle that can close below it, and we just need price to touch the 50. Then we're looking for the same entry, either a swing low engulfing candle or a 1, 2, 3 engulfing candle. In this case, we get a swing low engulfing candle. The stops and targets are exactly the same. In this case, we have a 41 pip stop loss, or excuse me, a 41 pip ATR. We add 10 to that because anything between 40 and 50 is ATR plus 10, which means we have a 51 pip stop altogether. A 1-to-1 risk reward, as you can see, would have hit targets and we would not have been stopped out here on this trade. So this is an example of our last chance entry. In layman's terms, after a losing trade that hits our stop loss, we must either see a new high out of price or price must come down low enough to touch the 50 period moving average. More than one candle cannot close below the 50 period moving average. And then we're waiting on the same exact two entries, either the 1, 2, 3 engulfing or the swing low engulfing candle, and we can enter that trade as a last chance entry with the same rules for stops and targets. So hopefully that makes sense. If not, just go back and rewatch that part of the video, but that is going to be our bullish last chance entry. And even if it didn't make complete sense yet, it's okay to go ahead and move on because we're going to go through a ton of examples of these trades in the further lessons when we start backtesting this strategy together. You're going to have hundreds of examples to look at. But now what I want to do is switch the script, flip the coin a little bit, and go take a look at a bearish example of the 50 EMA P first entry and last chance entry. Let's go ahead and do that right now.